LaPointe, and today I have Eric Gray here with Fairwood out of Snoqualmie, and he is going to give us a little update about the market during these changing times. So go ahead, Eric.
Good morning. So happy Wednesday. And, coming to you live from my daughter's bedroom right here. So hopefully everybody's safe and sane. That's the most important thing. But we're all kind of trying to make this work here in these unprecedented times. So I thought I would touch base and maybe just go into a higher level of what is the current lending environment, how that impacts you as a borrower. Trying to navigate this. I know Jenny can elaborate on what it means to the actual housing market, getting in to see open houses, showings, etc., and how that impacts maybe listings and all that. But I'll talk the finance side and just give you some quick bullet points to kind of reaffirm probably what you see in the headlines, but maybe go a little bit deeper, to kind of help connect the dots a little bit. In some, like everything else financial, including you see the stock market, equities, the bond market, mortgages are challenged right now. And so if you kind of take a look at it from a higher level backdrop, when you see the stock market bouncing all over the place and dropping some 30%, whipsawing back in 3 weeks, it's up 20%. That is not absolute and isolated. That has actually impacted the mortgage-backed securities that support where mortgages are derived from. And with that, it's compounded with the unemployment going to, I think, some 17 million people have filed for unemployment in the last 3 weeks, right? That compounded with the forbearance, right, that has been introduced through the CARES Act, through the federal government, right, for people impacted by the pandemic, has created a ton of risk, right, and liquidity issues on the lender side. And so the material effect to borrowers and consumers on the street is a pullback of loan programs, a tightening of what we call the credit box. So if, for example, if a credit score was 580, now it needs to be 640. And so that kind of just gives you an idea of where we're at. Today's the 15th of April. Like, this has all happened within, we'll just say, the last month or so. So the speed, how this has evolved and developed, has been incredible. And it really is a day-by-day thing, if not hour by hour. So really every morning it's waking up and looking at what are the new credit guidelines, what's happening in the industry, not only what's impacting Fairway directly, but what are the other big banks doing, what are mortgage brokers doing. So there's so many places that you can get a residential mortgage from. And so let's just dive down into some of those details, right? And so I'm going to give you both Fairway specific guidelines and overlays, and then just general stuff that I've seen within the industry, so you have a good breadth of what's going on. So for example, for us, just come on Monday, we actually updated our refinances. We're not allowed to lock any loans or take any applications and move forward with applications for refinances with a credit score of less than 700. Okay. Wow. And so that is all about risk, right? Yeah. And so with a little bit of background on that, with the forbearance issue, the unemployment rate dropping up, the risk of default happening for servicers and for lenders passing on these mortgages, first payment default means we can't pass that loan on, means we have to keep and retain that loan. And so what you're seeing is, when I go through a lot of these guidelines, you'll see a hedging of what would be deemed higher risk loans, right? Higher probability of default. And so to give you an idea, so that was for us for refinance. One of the major lenders just came out over the weekend that they have updated their guidelines for purchase activity to a minimum of 700 FICO score and 20% down.
I heard that. I heard JP Morgan.
There you go. I wasn't going to name names. I just tried to in general. But the point is once the big players start doing this, kind of falls into line. So while they're the only one right now, I would not be surprised if everybody starts following suit, right? And it's all about hedging risk until we get out of this uncertainty, until we see unemployment, start to kind of dip down and create some stability, and we get over what is the pandemic. A big part of our business is we do down payment assistance. So we'll help, first-time home buyers, millennials, right, that maybe are a little strapped on resources for down payment. And we partner with the Washington State Housing Finance Commission to offer those down payment assistance. And we call them bond loans, but Obviously, those represent not a lot of down payment, aka little skin in the game.
Yeah.
So they're higher risk for default. And so we paused those 2 weeks ago. And this Monday, we continued the moratorium on those until, again, we gain clarity. So those are temporarily halted and we're unable to move forward with those loan programs. The non-QM jumbo territory, and so those are for anything around here in the local Seattle market. Anything above what is the high balance limit of 741, 750 would be considered non-conforming jumbo. And the non-QM stuff is more of the fringe stuff. So we would classify people that are foreign nationals, jumbo high DTI, jumbo low down payment. That market was supported by investors, not by the government. So not by FHA and not by the GSEs, Fannie or Freddie. Those were actual investors. That market has all but dried up. And that was really the first one to go about 3 weeks ago, where that seized up and we couldn't offer those if we wanted to because we wouldn't be able to pass on. The investors couldn't buy up those loans. So that's probably the last one that's going to come back. But the nice thing is that's a small slice of the pie,
Yeah.
right, in terms of the overall loan origination. But just a good FYI. Fairway, we, again, 2 weeks ago, put a pause on just non-conforming on jumbo loans. So again, anything over that 741,000 mark, we have paused on that. Just because the correspondent investors that buy those loans from us have started putting guidelines and tightening the guidelines on those. And so from a hedge perspective, from a risk perspective, to make sure we don't get stuck with those loans and create an illiquid situation for the company, we put a pause on those. And again, for us, that's a fraction, that's the exception to the rule. And I know you can still go to the big banks, and get jumbo loans and whatnot. So they're not totally seized up like the non-QM stuff, but it just kind of gives you an idea. And it really depends on lender, how they're addressing and assessing risk and what programs they offer. For us, FHA, so we're still originating those, but whereas before we could go down to a 580 FICO score,
Yeah.
we got up to 640. Okay. Different lenders are up to 660. I think I've seen the big banks go to 680. So again, it really varies depending on lender. And whereas before we could go up to a 55 debt to income ratio, we've pulled that back to 45.
So let me ask you this, is the down payment, like before people used to be able to put down as little as 3%,
right?
Is that still available or is there now a limit on your down?
Yeah, we haven't seen an impact on the minimum amount for down payment. So conventional, we can still do 3% for a first-time home buyer, percent for a recurring home buyer, and then on the FHA side, 3.5%.
Okay.
Okay. And then a super niche product, right? But just to give you an idea, renovation loans, or what some people call them rehab loans.
Yeah.
Again, temporarily on hold, moratorium on those, really. And the reality is that it's not really about the loan per se. It's about contractors and the stay-at-home orders. And those loans come with guidelines that the improvements need to be done within 6 months. And so there's concern, obviously, that work's not going to be able to get done, given that they may be non-essential workers. And so I have builder friends that have halted construction on residential stuff, right? So we just chose to take the position of let's pause those for right now until this the virus, the curve gets flattened, if you will, and people get back to work. And so kind of with all of that, like how I'm coaching my clients and what I'm advocating for everybody in the general market that are either refinancing, but more importantly are purchasing, especially if they are under contract, given that everything is so fluid and changing and so dynamic, you really need to be in touch. So if your lender's not reaching out to you proactively and keeping you abreast, you need to advocate for yourself and make sure that if it's been 2-3 weeks since you've checked in and you've been on the house hunt and you just haven't found that house, that you check in with your lender and whatever loan program you had lined up and whatever your profile was in terms of the guidelines, you just need to make sure that everything's kosher, just so you don't run into a situation where, God forbid, you find your dream house and you go under contract, come to find out that that deal, that loan program, or your
Change.
it doesn't fit the box anymore. Right.
Yeah.
So, and then the other thing I would say is what I just described sounds pretty discouraging, right? And there's a couple takeaways. And again, this is kind of what all the new clients that are coming into me, how I'm coaching them is, number one, know like the stuff in terms of like your FICO score. I do a ton of work and I have a lot of tools to help massage what our FICO scores. So if you are, for example, at a 620 FICO score, and we know the minimum is 640, it is very doable to raise your FICO score 20 points to get within the credit box, right? I mean, I've raised people's credit scores over 100 points. I mean, that's pretty extreme, right? But my point is it's doable. And a lot of times it's not a lot of investment, right? So it's not that you need to pay down credit card balances like $5,000 or some crazy thing. It's just taking a deep dive and looking at the finances and putting together a step-by-step plan. And 9 times out of 10, we can raise it immediately, right? And the 1 time out of 10, if we can't get it to where we need it to be, it's the matter of just waiting 1 month, for it to soak a little bit, whatever changes we made, and then come back and revisit it. So it's not shut down, right? It's not like a long-term thing here and you have to shut it off for 6 months or a year. If you're in a position and you're ready to buy and you're ready to make that transition, that's what we're here for. That's what Jenny and I are here for. We're here to help you navigate through that, whether it be me on the finance side or Jenny, helping look at inventory, because I'm sure that's changing, right?
Completely
Everything that's
changing.
going on.
Yeah.
Exactly. And the way you negotiate and the amount of people that are in the market right now. So contrarian view is this is actually probably a really good time.
It's an ideal time for buyers to be out.
Yeah, exactly. Because Jenny can probably advocate here that before this pandemic happened, the spring selling season got pulled way forward and it was super hot and we were seeing appreciation really healthy and inventory was really low. So depending on where you are, I guess it just depends on the lens that you're looking at this through, but I would say leverage us. And so that's kind of, I would say, the Cliff Notes version of what's going on in the current lending environment. And hopefully that helps, but be prepared. It will probably be different next week.
Completely. Everything's constantly changing. And like, even on my side of things, the MLS keeps updating what are our new guidelines to follow. And hey, you can't have photographers come in and take photos of your listing. I think that wasn't available last week. Now it's supposed to be available this week. So right. There's a whole bunch of different things for buyers and sellers as far as guidelines to follow and how to keep safe and, deal with
right.
it. So.
Exactly. Yeah. Exactly. But not a lot of people, I think everybody's still shell shocked a little bit.
Yeah.
Still worried, so it's just a matter of education,
Awesome. Well, it was so glad have you on here today with me, and that we got to give people some more knowledge, some good, useful knowledge to help everyone during these changing times. I'm sure maybe something will be changed next week. So there's always good topics to bring up and discuss to everyone to keep everyone informed on how to kind of wade through what we're experiencing right now.